Ja, herzlich willkommen zu einer neuen Ausgabe des E-Talk. Das ist ein Follow-up-Interview und zwar mit Newcore. Es ist Luke Alexander da, er ist President, CEO und Direktor bei der Company und ich habe einen Conflict of Interest. Ich bin Aktionär und habe auch letztes Jahr aus einer der Positionen, also meiner Kernpositionen, die Position verstärkt. Ja, und er wird uns jetzt einmal erzählen, was er im letzten Jahr so gemacht hat. Look, thank you for your time. I said in my German introduction, I have a conflict of interest. I'm a shareholder. I bought in the last year a little bit more shares to then I think you're one of the company that are really will survive in these bad markets. And my first question is about the markets. We are close in the gold by all-time high, over 2000. And then you look at to the market and then you say something is wrong. Maybe the gold price is too high or the stocks are too low. So what is your explanation why it is what the market like it is?
Well, I guess firstly, Joe, thanks and nice to see you here in Vancouver. I've also been recently buying stock. I bought stock last week at 18 cents a share, and that's follow-on buying that I've had from previous participation in every single financing that we've done since I became CEO of the company about 3 years ago. So my view is that we're fundamentally undervalued at these levels, and that's why I've continued to buy the stock right up until last week, as I mentioned. In terms of the overall market, I guess, if we look at where the market is trading today with gold price pushing all-time highs compared to where it was trading a couple years ago when we were at similar levels, we're probably off about 40 to 50% from those levels. And I think one of the real dynamics that's changed in the overall sector, especially for the large caps and the producers, is the increase in costs that we've seen as a result of inflationary pressure. So if we look at GDX or GDXJ, for example, and you look at where it's trading compared to where it was trading previously, when gold was at similar levels, you're seeing at a big discount. But the reason for that is that cost inflation has taken all-in sustaining costs from, let's say, $1,000 to $1,200. So the margins and the profit margin for the companies that are producing today has been squeezed as a result of the cost base going up. My personal view is that, yes, over the last couple of years, we've seen huge inflationary pressure across the board, whether it's going to your grocery store or whether it's within the mining sector. But we're starting to see that inflationary pressure rolling over, and we've started to see that within some of the recent numbers from the US and from Europe. And as a result, I think we're going to actually start to see cost pressure start to come down, and as a result, you'll start to see those margins start to increase again, and inevitably that'll have a positive impact on the overall sector. And then for a junior company like us operating in Ghana, we've not suffered the same cost inflation. Part of the reason for that is that a lot of our costs are in cedis, which is the local Ghanaian currency. And the local, as you've seen with a lot of emerging market currencies and just about every currency relative to the US dollar, including the euro, is that they've underperformed. In Ghana, it's significantly underperformed over the last couple of years. A lot of our expenses are in the local currency, so as a result, we're partially hedged from the inflationary pressures because we are, paying a lot of our costs in cedis. And from a overall market perspective, typically what we see is, the money starts to move into the large seniors, and as we start to see these inflationary pressures roll over and money moving into that sector, it starts to move down market and into the junior sector.
Mm-hmm. Our last interview was last year in February, I think. So when we come to your company now, what's happened in your company, what you're doing the last year?
So we've been extremely busy over the last couple of years, as you would appreciate as a shareholder. So in 2022, so last year, we completed the largest ever drill program on the project, so 92,000 meters of drilling, really focused on a number of key areas, expanding the existing resource at all of our known deposits, so stepping out along strike, looking to grow those ounces, focused on making some high-grade discoveries, so the average vertical depth of the pits to date is only down to about 65 meters. Where we see a lot of these deposits grow in size and increase in grade as you start to drill below those oxide transitional zone and into the sulfide. So we made multiple high-grade discoveries in the last year. We also made a number of greenfield discoveries, so areas that we had done a bunch of soil sampling, trenching work, and required follow-up drilling given the targets we had identified. So we made 3 new discoveries in 2022. So that's what we kind of focused on with the completion of that 92,000 meters of drilling. We've then included a number of those meters that we drilled in an updated resource, which we just put out at the beginning of March. That resource has significantly de-risked the project. We've grown the overall size of the resource, but we also converted a number of the ounces from the inferred category to the indicated category, which as a resource investor you would appreciate means that those ounces have been de-risked because investors kind of have a lot more confidence in those ounces. We also grew the inferred ounces. So indicated now sits at about 740,000 ounces. We've then got an additional 970,000 ounces in the indicated category. So that's growth overall in the resource. And then for the first time ever, we put out an underground resource of about 136,000 ounces, which again, as an experienced investor, you'll appreciate that's not an underground mine at 135,000 ounces. But what it is for Newcore is it's a proof of concept. So it highlights the fact that we've got some of these high grade feeder zones that we see at these 5 million ounce plus deposits along the Sefwi-Bibiani belt from us. And with additional drilling and expanding those underground resources, that will start to highlight that longer term potential of being able to go from focusing on the oxide transitional zone for a heap leach project to transitioning to an underground mine where you put in a mill to start to process the sulfides as well. So completion of the 92,000 meter program, targeted on multiple different kind of areas, growing resource, underground resource, making new discoveries. All of that culminated in a resource update. And then we've also continued to de-risk the project in terms of a bunch of metallurgy that we've done on the project. We've also just completed, or in the process of completing, an environmental and baseline study. And that is one of the key things to get a mining lease. So yes, we've been very active in the last year, moving the project forward, growing the ounces, but also significantly de-risking it with a number of those other things.
Okay, coming back to this resource, we know oxide is this low grade, is heap leach, is from the cost efficient to bring this in production. The capex costs are much lower.
Yeah.
So, but the sweet spot is the underground, the sulfide, the higher grade. So what means higher grade compared to the oxide?
So if we look at the underground resource, we use a 1.5 gram cutoff for the underground resource. So the 136,000 ounces that we've currently got within the underground resource sits at about 2.5 grams per ton. So that's right off the bottom of the pit and into that underground resource. And that's something that will obviously warrant further drilling to continue to, look at these higher grade ounces. And the nice thing about those ounces is they're actually spread across 3 different deposits. So there's the option to go and focus on all 3 of those areas to expand all of them but at the same time, we've still just, started to test those higher grade shoots. We've allocated about 20,000 meters to date to those higher grade underground ounces, and obviously, much more drilling will be required to continue to grow those and prove them out.
The reason of my question is then when you look at the belt, above is Asante with the two
Chirano
mines,
and Bibiani.
And when you look at them, they're going deeper, and there is really where the resource sitting.
Yep.
So and that is now the question, is how comparable is their model, their geological structure to your geological structure. Then if it's right, then you're scratching only on the surface, and the really nice pot is underneath. So
absolutely. I mean, one of the nice things that we've got with our project is the optionality. So yes, scratching the surface, that can be very profitable, because heap leach mines, as we outlined in a 2021 PEA that we put out, can be very profitable ounces. You look at the NPV of the project at an $1,850 gold price, so $200 below where we're trading today. You've got an after-tax NPV of $300 million for a capex of $100 million. So very profitable ounces sitting there on surface. The nice thing with our project is, we could bring those ounces into production and use the cash flow to then focus on those higher grade ounces that sit below. In terms of comparables, if you look at Chirano and Bibiani and Newmont's Ahafo mine, which sits at an endowment of 20 million ounces, where you see these greenstone hosted deposits is grow in size as you start to drill deeper and you get into those higher grade sulfides. We think with this small underground resource that we've put out to date, that we've started to identify some of these high grade feeder zones. If you look at the long section in our presentation, you'll see we've got a comparison with our project and Chirano. And if you look at Chirano, not every single one of these areas has these higher grade feeder zones. So it does require exploration to identify where these high grade feeder zones sit. And we've obviously spent a lot of money and drill meters to test a lot of these areas. And again, with this resource that we've now put out, we're really highlighting that we think we've identified where some of these feeder zones sit. And now it requires additional drilling to go and follow up on those. We have been doing some of that drilling now, and we'll have some additional results come out focused on some of these higher grade areas. But it is important to remember that one of the real benefits of our project is we've got the optionality to continue to expand the very profitable ounces that sit at surface, as well as grow the overall size of the sulfide resource. And that's one of the things that you don't see with a lot of companies, is the optionality to have both of those things within one project.
Okay, what you're planning for this year?
So for this year, as I just mentioned, we've got some additional drill results which will come out in the next few months. We've got our final resource report which is coming out. So we put the initial headline numbers out at the beginning of March for our resource update. We're now completing the 200-page report, the 43101 report, which we will submit. We're also in the process of, as I touched on, completing an environmental and baseline study. So we've actually got a draft copy of that sitting on our inboxes. We'll get that completed. That's one of the key things that's required to get a mining lease in Ghana. So we'll get that done. We're also in the process of continuing to de-risk the project with MET work. So we've got 5 additional column tests that we're running right now. If you look at the historical work from a MET perspective, average recoveries were about 93%. So we're continuing to de-risk that. And a lot of this work may not be as exciting for investors, but it's crucial work for potential partners and acquirers of the project to be able to show that all of this has been completed. So continue to drill, continue to drive news flow from a drilling perspective, but also for low cost, de-risk the project, which ultimately adds fundamental value for the project, which then obviously attracts a lot of additional interest from potential acquirers and partners.
Okay, interesting point. Acquirers is, but I keep it a little bit. One question before. How much, you say drilling, you drill surface for the oxide, but also sulfide. What are plans for this year in drill meters, so that we have get a feeling for that?
So now that we've just completed we don't even have the full report out. So we're in the process of completing the resource update. Mm-hmm. So we've gone back in and we're reevaluating, okay, where should we spend our money in terms of expanding the ounces? There are a lot of ounces sitting right at surface that we can go after. And as you would appreciate, RC drilling is about a third of the cost of diamond drilling. So we can grow our ounces for much lower cost by continuing to target, the first 50 to 100 meters of oxide transitional material that sits on the project. So that's something that we will continue to do and we think is important to do because it, again, grows ounces and de-risks the project. We'll also look at, again, now that we're getting all of the results back and we're working through the block model, where the best area to target that diamond drilling is as well. So we haven't decided exactly in terms of what percentage will be, RC versus diamond, oxide transitional versus sulfide. But I would expect it to be anywhere between, 60-40 in any given direction. We recognize it's very important to grow those sulfide ounces, show that high grade potential, but we can't lose focus of the fact that those ounces near surface are extremely profitable and feed a mine plan very nicely. So 40-60 kind of in either direction, but we're still doing the work right now to determine what makes the most sense.
And in the size of money, how much money you will invest this year?
We're also working through our budgets in terms of how much we will spend this year. Today we've got about $3 million in the bank. So all of the work that I outlined in terms of the MET work, the baseline work, the additional drill results, which we will get out to the market, we're funded for all of that. Management and directors, we own 24% of Newcore. We've invested that alongside you and other investors. As I mentioned, I bought more stock last week at 18 cents a share, so remain completely aligned with shareholders from that perspective. So we're covered from a budget perspective for 2023, and as we work through drill plans, then we'll continue to reevaluate what makes sense in terms of number of meters and dollars spent.
Mm-hmm. You said before potential acquire and so on. What is really the final goal? Is it the goal to bring it in production, heap leach first, and then maybe going underground? Or is it more that and we see some big transaction at the moment, Newmont, Newcrest, for example, and so on. Or is it more the focus that maybe somebody comes and take over us?
So one of the, again, advantages we have with our project is the optionality. And that's something that, we've been talking a lot with analysts and investment bankers and our institutional investors. We're 40% institutionally owned today. These are deep-pocketed, long-term focused investors. And one of the things that they all seem to consistently recognize is Ghana being a great jurisdiction to bring a project into production. From a permitting perspective, from a timeline perspective, and from a skilled labor perspective. Ghana is Africa's largest gold producer, 5 million ounces of gold. You've got 3 of the largest gold companies operating there. You've got Newmont, Anglo, Goldfields. Newmont is investing another $1 billion into Ghana, and it'll take them to 20% of their global production coming from Ghana. So, it's a great jurisdiction to operate. And the timeline to production is a key differentiator compared to North America or, Australia or most other jurisdictions. We could get a mining lease within a year, and that's something that we're going to look at doing. So that compared to North America is a huge differentiator. So it is something that a lot of our institutional investors have identified and are supportive of, is to move the project towards that construction decision. But the reality is if you look at all of the M&A activity that there's been in Ghana, you had the Wassa asset get purchased by Chifeng last year, which was Golden Star. You had the Cardinal asset get purchased by Shandong a year and a half ago. You had Asante come in and buy both Bibiani and Chirano. And most recently, you've had Goldfields and Anglo merge or propose to merge their two assets, which will create a 900,000 ounce mining complex, which is, as you would appreciate, very large. When you look at all of the projects in Ghana, we're probably the second or third most advanced project in all of Ghana. So you've got this interesting dynamic where you've got major gold producers in country, and then this big void between major gold producers and ultimately projects that are moving towards a construction decision and are being fully de-risked. So that's one of the realities with Newcore and with Enchi, is that as we move this project forward and we continue to grow the ounces but also de-risk it towards a construction decision, that there's a good chance someone comes along and says, hey, we would like to buy this asset from you, or we would like to partner with you to take it into production. So that is a possibility. But again, we don't need that to happen. A lot of junior companies who have, $500 million capex is for a $1 billion project. There's only two outcomes. One is they either get taken out or they keep exploring, because a junior company to fund a $500 million build isn't realistic. For a company of our size to fund a $100 million build, and let's say it's $50 million of equity and $50 million of debt, that's something that's very achievable, especially with the institutional investors that we have on our share register. So that optionality for us to take it into production or for someone else to come and buy us is something that you don't see in that many junior companies, because the capex required for a lot of those projects within those junior companies is something that only a mid-cap or major could tackle.
Especially when it's going underground, when you're coming with more sulfides and higher grades, I think then attract is really the big ones. Then they are looking for this.
Yeah, well, permitting timelines and capital are two of the big things that, and costs for permitting in a lot of jurisdictions, call it $25 to $50 million, becomes prohibitively expensive for a junior. But again, to your point about going after that deeper sulfide, that exists on our project, and we're starting to prove that out. But we've got this icing on top.
I see absolutely clear as a junior. When you're the big company, then you say, okay, we spend another 40 million and put 10 drill rigs in and drill out the whole shit, I must say. But as a junior, you must take care about your money and where you evaluate this, and you say that the easiest way is the oxide. And the oxide is where you can put cheap ounces to your resource, and it makes sense, and you can do it by its own. Then you don't know if somebody coming around. That's normally always a surprise. I understand the strategy, and it's clear, and as a junior you have this only choice. And the big ones, when it's always a question when they see, okay, we have enough information that we know there is underneath the big pot than we see, and the higher grades like the other mines in the area in this trend. So then it's only a question of time. But At the moment, it's tough. Not tough, really tough. It's not the right word. It's easy for me and clear the strategy that you are looking on the oxide and focus. You say maybe 60 or 40%, how you worked it, then you can put cheap ounces to that.
Well, it's a matter of doing both in the most cost-effective manner possible. So expanding those inexpensive ounces near surface, that can add a lot of project value and really boost the NPV for the project. Continuing to highlight, the underground higher grade material is something we're, not losing focus on, and something that we're actively drilling. So it's balancing both of those things, but then also all of the de-risking work, the MET work, the baseline studies, all of that adds fundamental project value that, again, makes the company more attractive and more valuable down the road.
Especially, I think the MET work makes really a lot of sense. But for the investors, it's maybe not that excitement. But I know it's a very important work. Then it's de-risk the project, and the de-risk is especially in the resource business, is very important.
It's hugely important. Again, you can mine the market all day long and put out one hole that looks great, and the market gets all excited. But at the end of the day, that's not going to lead to the company, building the project or someone else coming in and wanting to, take that, buy that company. You need to do, combination of good drill results, but then all of that de-risking is hugely important as well, because that's fundamentally what the company gets built off of.
You're in a good position, I must say. Then you can come up with good drill results and do this by this MET work next to them. Then the problem is with most of the project is that they're doing a lot of drilling, excitement, share price going up, and then they make the MET work, and then it's not so exciting for the people and the share price going down. So, but you have still this drill results was coming out. So it's a from this standpoint is a very good situation. Next to them, that the market itself is not really looking great. But when we should buy a stock, when it's high or it's low?
I bought last week because it was low.
Thank you for the update. Hopefully we can do it again. I hope also that I come now on the regular time over to Vancouver, or we do it through Zoom like we do it last time.
Absolutely, be great.
Ja, das war ein Update von Newcore. Ich bin ja Aktionär. Ich habe auch mehr Aktien gekauft. Er hat auch Aktien gekauft, erst letzte Woche wieder zu 18 Cent. Der Aktienpreis schaut nicht wirklich so gut aus, wie es ist, aber das wichtig ist einfach, dass Sie mit dem Projekt vorkommen. Und Sie haben zwei Strategien. Die eine Strategie ist, Sie haben an der Oberfläche, da ist eigentlich die Ressource bis, how deep is the resource at the moment, you say?
The average vertical depth is only 65 meters.
Es ist nur 65 Meter, also ist nur diese Oxide-Zone, und die Oxide-Zone, die wird mit Heap Leaching gemacht. Das ist auch eine sehr kosteneffiziente Vorgang, der kostet ungefähr 100 Millionen. Erwarten Sie, dass die CapEx sind, das in Produktion zu bringen. Der Vorteil ist auch bei diesem Oxide ist, dass Sie AC drilling können, und die sind viel billiger als Diamantbohrung. So, und ich sage jetzt meine Wörter, diese Oxide wird den Großen nicht wirklich interessieren. Das ist zwar schön, ist toll, aber unter dem Oxide liegt das Sulfide. Und das Sulfide ist, dass alle diese Projekte, die an diesem Trend liegen, the trend is a Bibiani trend.
Sefwi Bibiani Belt.
Also dieser Bibiani-Trend ist bekannt für das. Da sind einige Minen, teilweise extrem große Minen, dort, die teilweise 20 Millionen Unzen haben, und die gehen alle tiefer, und wenn sie tiefer gehen, in das Sulfid reinkommen, steigen auch die Gehalte vom Gold. Und sie haben eine kleine Ressource gleich einmal bestätigt, die haben sie in 3 different Zonen gemacht. You have 3 different zones with this lower grade, higher grade, but in the sulfur.
Well, we've got multiple different zones, but for the actual underground resource today, it's within 3 different areas.
So, und das Problem ist, dass diese Feeder Zones, wie sie heißen, also die muss man erst einmal definieren. Und sie haben eine Ressource bereits von dem tiefer liegenden Sulfide, und das sind aber auf 3 unterschiedliche solche Feeder Zones, und das heißt, sie haben quasi auch, das ist eine kleine Bestätigung, dass diese Feeder Zonen existieren, und die müssen sie halt jetzt auch mehr bohren. Es gibt mehr solche Feeder Zones, das ist klar, aber die 3 haben sie schon mal definiert. So, und deswegen ist es jetzt ein Drahtseilakt, wo sie sagen, okay, wie viel investieren wir in das Oxide und wie viel investieren wir in das Sulfide, das im Untergrund liegt, denn dieses Sulfide wird natürlich die Großen vor allem interessieren, weil die sagen, ja, da bin ich ja schneller mal auf ein paar Millionen Unzen, die ich dort kommen kann, und dann wird das Projekt natürlich extrem interessant. Ghana an sich ist sehr interessant, weil es nämlich sehr schnell in Produktion zu bringen kann. Er hat gesagt, dass es innerhalb von einem Jahr mal dementsprechend auch eine Produktionsentscheidung treffen kann, also die Genehmigung kriegt, und das ist weltweit eigentlich einzigartig. Das kriegt man in Nordamerika zum Beispiel nicht hin. Und das ist ja das große Thema, was wir im Rohstoffbusiness haben, sind Genehmigungen. Die Zeiten der Genehmigungsphase haben sich massiv verlängert durch die ganzen Regularien, und sie machen, und das ist auch das Interessante in diesem Jahr, sehr viele Basisstudien dazu, um das Projekt zu de-risken. Das heißt, es werden sehr viel Network gemacht, also von Erlaugungstests, wie sie gemacht werden, dann aber auch schon Umweltstudien, Vorstudien gemacht, so damit quasi das Risiko vom Projekt sinkt und es schneller dann in Produktion gebracht werden kann, wenn der Markt auch dementsprechend reagiert. Er hat gesagt, wie wahrscheinlich ist es jetzt wegen Übernahmen? Ja, Übernahmen, mit dem kann man nie rechnen. Ist super, wenn sie kommen. Wenn es unfreundlich ist, ist es nicht so super. Also das ist jetzt meine Interpretation. Aber sie können nur die Arbeit machen. Und die Arbeit heißt eben, sich konzentrieren auf den Oxide, um das voranzubringen, die Network dazu machen, damit das Projekt de-risk wird, und aber trotzdem auch noch auf dem Underground Sulfide bohren, damit man dort quasi auch für die Großen, ich sage es jetzt einmal, ein Leckerli hinlegen kann, damit wir sagen, okay, wir kommen jetzt in das Stadium, und wenn ihr wollt, und wir haben sehr viel über Ghana gesprochen, Ghana, da ist der größte Goldproduzent in Afrika, zieht Geld an von außen. You say Newmont invest 1 billion. 1 billion.
So they're taking their Ahafo project, they're investing another billion into it, and it'll take them from 14% of global production to 20% of global production.
Okay, Newmont investiert 1 Milliarde und will quasi dann 20% aus Ghana produzieren, derzeit sind sie 14%. Das sieht man, wie stark eben die Ghana auch Geld anzieht, und sie sind einer der 3 großen unentwickelten Projekte, also die noch nicht produzieren, in Ghana. So viele gibt es nicht. Das heißt, man muss jetzt eigentlich nur investieren. Was mir sehr gut gefallen hat, das Management hat 24%. 40% sitzt bei strategischen Investoren, große Investoren, die auch Geld haben, um die Mine dann zu finanzieren, also die Oxide-Mine, Heap Leach. Und und das war auch, sage ich mal, ein Grund, warum mir die Story gut gefallen hat, warum ich auch nachgekauft habe. Ich habe teurer nachgekauft mit ungefähr, glaube ich, 26 Cent. 18 Cent ist jetzt schon wirklich tief, aber so ist halt momentan der Markt. Der Markt ist, obwohl wir beim Gold fast beim All-Time-High sind, ist er eigentlich noch sehr depressiv. Und das ist auch, sehe ich halt auch eine Chance, vor allem deswegen, weil ich ja glaube, dass wir wirklich jetzt am Wendepunkt sind, und die nächsten 10 Jahre werden beim Rohstoffsektor wirklich großartig werden. Ja, das war's von Newcore im April 2023 aus Vancouver. Tschüss und Baba, pfiat euch. Thank you.
Thank you very much.